Welcome to the channel, guys. Happy Sunday. What a way to start our week. So next week we're looking to hear from earnings. A lot of earnings are coming out next week. From here on, guys, it's not so much about economic data but more focusing on earnings. There's some stock that's reporting next week that I want to go over for you guys, especially TSM stock that should be reporting on Thursday. So Thursday we will be hearing from TSM. And who doesn't know, TSM is one of the fab producer. So TSM is the stock. TSM is a stock to watch for next week. Also, I think a great stock too that will be reporting is nothing other than Nvidia. I think Nvidia will crush it next week when they do report. Not Nvidia, I'm so sorry to say that. Netflix, I think Netflix will crush it next week when they report their earnings. I can tell you, even if Nvidia miss, guys, buy on the dip. You want to buy these dips because when Netflix was trading, let me go over straight to my screen. As you can see, I'm sharing my screen with you, but let's go straight to Netflix. When Netflix was trading at a great price, guys, when I was saying it's not a time to get in, the stock is overbought. As you can see, this is a line that I drew this line way months ago. This was in, it's sad to say, but this was in, let me see, Netflix. Look at my support, guys. Just look at my support. My support was drawn from April. This was from April, guys, when Netflix was trading at $542. If I have got in and put all my life savings on Netflix from then, guys, I would have been up 35%, 0.65 year to date. This is how high the stock has been trading, but I can tell you this from now. If Netflix shall miss earnings with their reporting next week, Thursday, I assume on the 17th. Let's just check to see. Netflix is reporting Thursday. Next week, Thursday, Netflix is reporting most likely after the bell. Yep, after market. If I want the stock to miss earnings, you know why? Because I want to get in on some good. And even though I'm still going to buy because ad revenue, they're going to make a lot of money off ad revenue. So this is a great stock to trade next week, Thursday. Definitely next week is a great stock to buy and hold. I want Netflix to miss and pull back down to $600. Even if we come to $500, golden, because this is a stock that's not going nowhere no time soon. And worse, they capitalize on cutting back on password sharing, and also they're expanding with their ad revenues. The company is just a killer. They're just dominating in their area right now. So again, it's a win-win for me and it's a buy. So next week on the dips, I will be getting some shares. It's a little bit pricey, but sooner or later the company will be, I'm pretty sure they're going to do a stock split like most company did. Supermicro Computer, Nvidia did. Stock split is on the way. Hopefully soon we can have more shares in this company. But the stock is super overbought. As you can see, previous high, guys, seems like it's becoming resistant right now. Previous support. As you can see, the stock tends to find a support right here. But on any pullback next week in the low 700, I'm getting some. Why? Netflix is a long term buy for me. If you had gotten from $162, boy, I can tell you guys are making tremendous profit right now. And I would say continue to do so with Netflix. But TSM, guys, as you can see, it's a stock to watch. And next week with report, I'm pretty sure they're going to beat earnings. They're reporting on the same. They're reporting on Thursday as well. So Thursday is a day to watch out for TSM. What a day to watch out. These stocks can move the market tremendously. And oh, TSM is reporting before the market. I love when they report before market opens. You know why? Even if the stock miss, you can still capitalize on that. So when TSM do report, it's a win-win. So this is reporting before the market open, and then again, after market close, we're getting news from nothing other than Netflix. So this is something to watch out for. As you can see, resistant form at $193, and the stock trying to approach there with good news. The stock can either go down or up. But this is definitely a stock to buy for me too, because if you had bought this stock early in this year when the stock was trading, let me get to 2023. See, all right here. If you had bought back even in January, guys, the stock was trading at $86 a share. As you can see now, the stock is trading double that at 193, currently at 190. So TSM is definitely something to look forward towards too. And J&J, this stock is just all over the place. So this is something to watch for next week. Again, J&J, they were trending back in COVID days, but now that COVID is over, it's based upon trial and research and what does the FDA approve for them. But it's not Johnson and Johnson is not therefore it's not a market for me. I don't see myself getting any of these stock, but I'm just breaking it down for you. So as you can see, stock got rejected, sold off, consolidated. Of course, upon approval of the FDA, pushed up, got rejected, and now got rejected, pushed up, and with earnings, chances are stock might go up or continue to sell off. So they have a strong support at $143. So if they do get rejected, you can see that a strong support was formed at $142. So support, resistant, consolidation. So I don't care for this stock, but if you're definitely a holder for this stock, you want to watch out for if it's a short term or a long term play. High the stock tends to get rejected at $176 a share, as what Great Warren Buffett said. When the stock is too high and coming to a point where it cannot go any higher anymore, you wanna capitalize on profit taking. Have Warren Buffett have been doing with Apple. He has been liquidating most of his shares that he have for you know when, before I was even born on this earth. But he has been taking profit because the stock shows room to grow and room to come back down. So the guy decided to take profit. And also Procter and Gambling. This is a stock that I have been watching for a while. I have some support and some resistance, but it's a stock that gradually climbs. So if you're looking for a long-term play, definitely point towards Procter and Gambling, because for me it seems like a long-term play, and as you can see, it made gradual progression from when it was trading at $135, and as you can see, it trends its way up with time. So long-term play, look towards Procter and Gambling. They're reporting on, let me see, earnings should be out, I think, on Friday. So Friday might most likely after market. Let me go to 180 days and see when they're planning to report. Central Standard Time earnings. This is the dividends conference call, and the 18 Central Standard Time. It doesn't say if it's after market or before market, but most likely it's after market. They're all before market. Sorry, right here. So before market on Friday, Procter and Gambling are reporting earnings. So this is something to look forward to. On 180 days, they show a low of $166. And again, if you want to go long on the stock, you can look towards getting it at a discount if they miss earnings. As you can see, previously stock sold off, found support at 153, then higher lows. Stock sold off, found support at 158. So if it do miss earnings, and you can look for a support at the 200-day moving average, which would be $163. Of course, the stock can continue to go lower. Doesn't That doesn't come to me at a surprise at any time, because you never want to catch a falling knife. But this is something, if it meets earnings, you can get in here or wait for consolidation. This, which is right here, stock got rejected, consolidate. You want to see the stock going sideways, and then from there it can only make two directions: either continue to go up or continue to get rejected, like Procter did. Consolidated, then push down, then after that a rally, and then same thing. We call these higher high. It went up higher, then came back down, then went up higher, came back down. The only thing you want to pay attention to, if the stock pushed up higher, guys, and form a new lows than previous low. For example, Procter and Gamble form a low of 153, and then it got sold off and formed a low at 157. This is what you want to see, which is a higher low. You don't want to see the stock pull back down to 153. This is not making any sense. You want to stay away then if that's the case, because therefore it's the company is not doing well, and you don't want to put your money in a company that's not working for you, because it doesn't make sense for you to work so hard for your money and put it in a company when these guys already make themselves and getting extra cash from the stock market, and you contributing to land into your pockets. So this is something you want to stay away from. With Procter and Gamble, as you can see, the stock make higher low and higher highs. So with time, the stock gradually goes up. For example, the stock was trading January 15th at $142. And if you had bought from December 15, if you had bought to current highs where the stock is trading at 171, which is right here, you would have been up 28, no, you would have been up 20.31% on your investment. So these are company you want to invest in for the long term, where you put your money there and it continue to make money for you. So these are some of the company that reporting next week that you want to pay attention to. So, guys, until then, let me know what you guys are up for. How can I help you in those comments? A lot of report is coming out next week where economic data is concerned. Nothing appetizing to the market, nothing to look forward to other than Thursday. We get an initial claim and continuous claim same way, but this is something that can move the market tremendously. Depends on what Jerome Powell would going to do, whether we're going to get a 50 basis point or we're going to get a 25 basis points. At this point, I really don't care for it, because I just want to get into a great stock that's making progress. For example, Procter and Gamble, and hold that stock for a while. So Monday and Tuesday, we're getting no reports whatsoever. So no economic data to expect on that day. And where the market is concerned, I think the market opened in red. SpaceX is killing it as usual. Elon Musk, is Tesla a buy, or we should stay away from Tesla? Let's break it down. But this is a killer, guy. This is something that has been rocking the market, and I think with 10-year Treasury yield continue to rise, the stock market neglecting that 10-year Treasury yield is up, guys. The market is going to pay for this one day, but we don't know when. So we want to stay on the edge, because earnings can boost this market, can give this market a strong tailwind to the upside. And also, we have to pay attention to 10-year Treasury yield continue going up, because if we don't want to get caught in a falling knife. So that's something to watch for. And I think NASDAQ currently is down. It's still not updated on CNBC website, but on my Thinkorswim, it's telling me that NASDAQ is down this afternoon. Going into tomorrow, there's a lot to look forward to. So, guys, again, as you can see, NASDAQ is in the red for now at down 36 points, 0.18%, but this can change tomorrow. And again, it's something to look forward to, and we're approaching previous highs, guys, and 10-year Treasury yield is up. So there's two negative catalysts right here. 10-year Treasury yield is up, that's one, and two, NASDAQ is approaching previous highs because, again, of 10-year Treasury yield. So we want to pay attention to this week. Strong attention to it, because there's two things that can happen. Is either the market continue to goes up with better news, or if not, the market can pull back with 10-year Treasury yield, keep on climbing. So as you can see, market is down. So again, like and subscribe to the channel. Stay tuned and let me know how can I help you in any circumstances in the market. All right, feel free to subscribe to the channel and comment on those videos. And if you think or feel that I earn your time, please smash that like button for me. Until then, stay green in the market.